Good morning, traders. Welcome to Trading Together. I'm Mel Gacee. Today is Friday. Happy Friday, everyone. Friday, March the 6th. If you are here this morning, welcome. Thank you so much for joining. And if you are here, drop your name in the chat. I would love to meet you, get to know you. This is a friendly place where I help traders of all levels. I take live trades right here on this stream. If we get the right setups, I'm going to take live trades in front of you. I'm going to talk through what my thought process is. We're going to talk about market analysis and how I use tools. There is no place out there like this channel because I'm doing this all for free. I'm going to help you get your feet on the ground as a trader. And if you've been trading for a long time, I can help you with that as well. We will take trades together. We'll analyze the market. If you have comments and questions, this is the perfect place. Drop those in the chat. I love to hear your questions. I love to hear your comments, and I will do my very best to tackle and answer all of them. So that being, what a morning, am I right? Wow. Oh boy. So let's talk about what is going on today. This is a trappy morning, I'll tell you that. So let me get over to the right chart here and let's zoom out a little bit. We'll look at kind of what's happened overnight and so far what's gone on this morning. So here's our overnight movement. This is the ES. These are the futures over the S&P 500. The S&P 500, of course, being the index that everybody hopefully is familiar with. So the futures run, these are future contracts placed on the S&P 500. Futures run almost 24/7. They shut down for a few minutes every day, and they shut down over the weekend from Friday night to Sunday night. They're shut down. But other than that, futures are running 24/7. So futures is a great place to get the information when the main markets are closed. When we are outside of regular trading hours, futures is a good place to go to figure out what market part. That being said, let's take a look at what the futures told us last night. We looked at a pretty consistent dip all night, right? We did do some climbing after the close yesterday, right here. So we did some climbing after the close, and then we sort of really stayed in this tight range for hours and hours and hours. And something happened in here at about 3 a.m. Eastern, and I'm noticing lately 3 and 4 a.m. Eastern seems to be a time frame where moves are beginning to happen. I don't know why. Maybe because Europe comes online at that time. I think Europe comes online at 4 a.m. if I'm not mistaken. But basically, I am seeing in more volatile movements begin to happen at around that time frame. So sure enough, we started to get this dip right in here at about 4 a.m. Eastern. Dip, 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 and went sideways a bit, came down, dipped. And then what did we get this morning? What we got this morning was, let me zoom in for you because it's important. We got a slew of data, really, really important data. What data was it? Well, let's take a look at the chart first. So right here at 6:30 a.m. Eastern, look at this bar. This is just a 1-minute bar. What do we see? We see a 6,800 down to, we see a 35-point drop in 1 minute. 1 minute. That's a lot. We have a increased volume, of course, at that same time. This is the volume bar down here. 35-point drop in 1 minute. What happened? Data came out. By the way, guys, I kind of like puts here. Hold on a second. I am looking at 676 puts here. Well, it's moving quick. 675 puts. me see here. I'm not in yet. I'm just looking. We've been in a bit of a trappy situation so far this morning, and we'll go over that in just a minute once we're done with talking about the data. The data was really important, and you need to understand it. As a trader, you have to understand how this economic data affects the market. It really, really does. It really, really does. Gavilan, good morning. Good to see you. All right, no drop at this. Well, let's see. Let me get over to the VIX here. Got stuck in a 670 put. Ooh, sorry, Gavilan. Were you on the other stream with me? Or is this a trade you took by yourself? All right, no drop at this moment, but I am interested in puts here in just a minute. We've tried twice to beat this low of day from yesterday, and we haven't been able to do it yet. So let me see what we get here. If we get a firmer rejection, I might jump in on these puts. Was in the other stream, couldn't get out fast enough. Uh-oh. Well, Gavilan, that is a tough one. You really, I'm assuming you're down pretty significantly at this point. I'm going to guess you're down a good bit, probably what, 80%, 90%? Is that right? Oh, 60. All right, not as bad as I thought. You have two choices here, Gavilan. You can, excuse me, excuse me, excuse me. Actually, you have three choices. You can average, you can take your loss now, or you can wait and see if it comes all the way back down. I don't think the odds are great that it will come all the way back down, but it could. It could. I don't think the odds are great for that one. So basically, you're kind of looking at take your loss at the next downturn, maybe, something like we just had here, this test of the VWAP. I bet your loss was much better at this point. Or average at the next push up and then wait for it to come down. Now that really is riskier, right? Because it makes your position bigger. They're just not dropping it yet. So I don't know. I'm sort of wanting to get into this put, but they're really kind of toying with us right here. I don't like it. And there it goes. It's just pretty trappy today, that's for sure. Hard to make money when they behave like this. I'm going to give this put a quick try. Not looking for anything big for sure. All right, I'm going to take a quick win here. Punch it. That's about 3-4%. Super quick win. I'm not trying to swing for fences today. I've got a nice profit already this morning, so I'm not trying to give these guys anything back because it really is trappy this morning. It is challenging. Thank you, Gavilan, saying bless you. Thank you. So again, Gavilan, if we come back down here to the VWAP, you could consider exiting at that point for a loss, or you could wait until if they spike it back up here and try to average it. But again, it is riskier when you average, that's for sure. Because you're making, you're adding to your position size, you're making it larger, and there's no guarantee that it's going to win. All right. So let me finish my overnight analysis. So we got that big drop down at data at 6:30 this morning Eastern. Sorry, 8:30 Eastern, 6:30 my time. Big drop down. And what did it do? It just dumped all the way down to 67.15 on the ES, which is only just a few points away from the S&P 500. That's a significant drop of over 100 points. I think at that point in the morning, we were down over 100 points. So pretty significant drop there. And what's the reason? Why is the market freaking out? Okay, there are a couple of big reasons why the market is freaking out. But first, take a look. So we hit this low at about 9:58 Eastern this morning, and we bounced from there. We came right up. Look at how these lines get respected, guys. This is why I mark them on my charts. Look at this line to the tick. We came up to the low of day twice. What are we making here? Anybody? There's two names for this pattern. There could be more, but two that I use. We are making a letter M, and you can think of M for murder usually, or when we do the opposite, when it's a W, you think of W for win. So W being a bullish pattern, M being a bearish pattern. M for murder, W for win. So when we make a letter M, the other name of this pattern is a double top. Double tops are notoriously bearish. We hit this low of day from yesterday. As you guys know, I mark these levels off every day on my chart. I get up early. I study the market. I study my charts. I do that every single day. And so these lines represent what was our behavior yesterday. This was the low of day from yesterday's trading. And this is where we hit twice in a row. Boom, boom. The bulls are not able to get up over yesterday's low. That is a bearish condition. If they can break up through here, great. But until then, this is a bearish condition. Okay, if we get another test here and fail, I might short that again. So that is how the market has behaved. And this is tricky, right? Because we're coming into the morning with this deep dive, and retail comes online right here. So what do the big boys do, right? They've already played. They've already taken their profits. They had this thing all the way up last night. Where did they put it? Where was our high? Right here. 68.50 they had the market at. They took their money. They sold up here at 68.50. 68.50, 100 points over where we are right now. They're selling. The big boys are doing their thing, right? And retail, well, we don't get a chance, do we? We don't get a chance until when? 9:30 a.m. So here's our chance. They give us this little drop. That's how much we got to participate in that 100-point drop. We got this. That sucks, right? Fortunately for me, I had a feeling this was coming. I bought puts at the close yesterday, so I'm up really nicely today, really nicely. But my point is that retail is now getting screwed because what did they do? They got it down as low as they wanted. I'm not saying this is the low for the day, but it could be. Pulled it down as low as they want. Only gave us this room to trade, right? And then what'd they do? All the retail jumped in here and said, "Oh, we're shorting." I was one of them. I took a scalp right here at this low. I took a scalp and I barely got out with my skin on because they immediately reversed it. So I saw this weird price action in here and I saw the way they were manipulating the option prices and I was like, "Nope, I'm out." So I jumped out at, it was about a 1% loss. And then immediately, what did they do? Boom, they pushed it up 60 points, right? Look at that. Boom. What do they do to, what is retail to the big boys? Anybody know the answer to this? What is the retail trader to the institutional trader? What are we? We are their liquidity. We are their lunch. We are their steak dinners because they set these traps for retail. We're jumping in with both feet at this bottom here. And what do? Oh, thanks for that. Thanks for that, guys. Now we're going to go ahead and push this thing up and we might sell again over here. We might sell a chunk of our stock right here. We might sell another chunk right here. But, thanks you guys for coming down here and being our liquidity. We appreciate you. And they turn it against us. This is why the deck is stacked against the retail trader. This is why I personally have chosen to scalp and to day trade because I call myself a krill. We're like the krill that follow along behind the whales, right? The whales are eating their big steak dinners over here for 100 points. They're just chowing down. What does retail get? What do the little krills get? We get the crumbs that fall out of the whale's mouth. But you know what? I'll tell you this. I've been able to make a very, very comfortable living being a krill, okay? I watch what big money is doing. I can see it on the charts. I trade and I scalp. I'm not looking to swing for the fences. I'm not looking for 75, 100% wins. No, I'm looking for small, 4, 6, 10% wins. That's what I'm looking for. And I have a 90% win rate, sometimes more. Sometimes it drifts down into the high 80s, but I stay roughly right in the 90s. And I do very, very well trading for a living. This is what I do for a living. And I've learned to kind of follow in the big boys' footsteps. So that's what I mean when I say I trade like water. The little krill following the whale. That's what I'm trying to do. That's what I'm trying to accomplish. And so far, it's working for me. So here's here's where they screwed retail right here. Boom. Sorry guys. Thanks for jumping in here with your puts, with your sells. We're gonna take your money and we're gonna go ahead and go the other way. And oh, by the way, when we get to wherever we like, we might sell it again, but we don't know. All right, so we are dropping again, coming down to test the VWAP. I am going to switch my puts over to the 674s. I'm not in. We're a little close to the VWAP for me to jump in because last time we tested the VWAP, we bounced. So I don't know if I want to jump in on these puts here. I liked it over here, but it just wasn't moving the way I wanted. So I'm going to give this some time. I'm not going to jump on puts right now. Okay. So now basically what we're looking at is a pretty big range, somewhere between 67.15 and 67.75, a 60-point range so far on the day. Let's see how to trade this. So again, I'm not going to trade this close to the VWAP. Remember, the VWAP stands for volume weighted average price. This is an average. This is a moving average like any other, except they calculate in a little bit of weight as it relates to volume. So do you see these blue bars down here? These are volume. This tells you how many contracts are being traded. As volume rises, the VWAP gets a little weight from that. The VWAP says, oh, okay, at this price right here, this was a little bit important. So it adds a little weight because of this volume. So it isn't just a straight moving average. It's a volume weighted moving average. All right. Back to our line here, our VWAP line. And like I said, not going to trade a put this close to the VWAP. Let's wait and see. If they push down through the VWAP, I might consider a put, but it'd be a little bit extended because this move actually really started right here at 11:06 Eastern. So this move is about 20 minutes old, 18 minutes old. So for me, it's a little extended, even if we dropped through the VWAP. So the main feel for today, obviously, is bearish, right? We are bearish. We're down 1.1%. That's a good bit. There is fear in the market. There's bearishness. We are currently in a risk-off environment. Now, let's talk about why. We were starting to talk about data here. We got data at 8:30 a.m. And that data was a big handful of data, right? Let me see. I'll go ahead and share that with you. Give me just a second. Okay, let's make sure you can see this. Yes, okay. All right, let's take a look at what happened today in data. This is important. And what I was starting to say earlier is if you don't track data as a trader, you're missing the boat because there are certain things that the market, investors at large, are looking at. And who moves the market? Big money moves the market. Well, big money cares about the economy. Big money cares about labor. Big money cares about what's going on in Iran because it affects them, right? So they care. They're watching this data, and you should be as well. So here today is the whole slate of data. This, by the way, this calendar is called the economic calendar. Bloomberg does it. I'll go ahead and drop this link in the chat for you. If you don't have an economic calendar that you are using, this is a good one to use. I like it. There you go. That is the link for the Bloomberg economic calendar. Now, what did we get today? What we got was average hourly earnings. Okay, that's a nationwide national number. How much are people making on the average across the board? And that was stayed the same from last month, up 0.1% from expectations. So this middle column is the consensus or the expectation. This right column is last month or last reading. And this left column is the current reading, okay? So average hourly earnings were up, were even from last month, but up from consensus. Core retail sales. This excludes big vehicle type of purchases, right? This is the core of retail. Not doing so good, right? Core retail, not looking good. Anybody surprised about that? No, I'm not. The consumer is struggling, right? We all know that. So core retail sales sitting at zero, no rise, no loss, down 0.1% from consensus, but there was no movement last month either. Not looking good. Non-farm payrolls. This was the big kahuna. This was the big doozy. Everybody was waiting for non-farm payrolls. Why do they call it non-farm payrolls? Because it literally is a look at payrolls across the nation, excluding agriculture. This is a government number, comes from the Bureau of Labor Statistics, the BLS, who I affectionately dub the BS, the Bureau of BS, because they work these numbers like you would not believe. And the revisions are insane. They revised, last month, they revised away almost 1 million jobs from the previous year. They just never were. Oh, gosh, I guess we made a mistake. I guess there's, oh, is there 1 million jobs? Oh, is that right, Nancy? Were there 1 million jobs missing? Yeah, there's 1 million jobs missing from last year. They just never were. And the Bureau of BS is going to sit there with a straight face and try to tell us that that's just a revision. That's just a data thing, you know. No, it's baloney. It's malarkey. So, let me tell you how I really feel. Okay, non-farm payrolls came out with a 92,000 decrease from 126,000, which was also revised down from 130. So last month, the labor number was 130,000 to the positive. The consensus, they were anticipating only 58,000 jobs added. And what did we get? A big surprise. There were almost 100,000 jobs lost, nothing added. This is not good news, guys. This is not good. And what we're seeing here, in my opinion, is just scratching the surface. We, the average person, we all know that the average American is struggling. We all know people who cannot find a job. We all know people that are trying to just barely feed their family. People that were living in middle and upper income salaries are now struggling just to make ends meet. You know, how can you be making 80,000 a year and you can't feed your family? What? We all know that this is a problem, right? So we're only scratching the surface with these non-farm payrolls. Okay, retail sales. So this is non-core. This includes large vehicle purchases, and that was down 0.2% from the previous reading, which was sitting at zero. It was up from the expectation. Okay. And what did the unemployment rate do? Well, it came back up to 4.4. So we've kind of been playing around this 4.3, 4.4 area. That's BS too, right? Do you think, just look around in your circle of friends and family. Are there more than 4% of your circle of people, acquaintances that are unemployed? Probably. There probably are. I don't think that we are looking at a nationwide unemployment rate of 4%. I just don't believe that. But let me take off my tinfoil hat for a minute. So unemployment came up to 4.4. All of these numbers together sent the market into a tizzy. And guess what? The market was already in a tizzy. The market was already upset about what? Iran. What's going on in Iran? Well, we attacked Iran in combination with Israel. I thought our military did a fabulous job. We got the Khamenei, Ayatollah Khamenei out of there, which was great, right? What an evil leader, in my opinion. Not great for the average Iranian citizen who has to pay the price. That's always the very, very tragic part of any kind of violence and war. And we can never lose sight of the human cost. It's very, very tragic. But on the larger economic scale, striking Iran created instability in the whole global market for oil, and not just oil, guys, natural gas, energy, right? So in the oil market, we are now looking at crude sweet oil pushing almost $90 a barrel, right? That's a problem. Gas is going to go up. Prices are going to go up. Oil runs the world, right? Everything runs on oil. If we have elevated oil prices for an extended period of time, which is exactly what we're going to have, we are going to see a global response economically. Everybody is going to suffer, everybody, because prices now are even, God forbid, worse than they've been. Prices are already through the roof. How on earth can they go higher? And this is what the market is freaking out about. Oil is up a lot. Guess what else is up? Natural gas. So Qatar basically said, so here's the issue. The Strait of Hormuz. If you look at a map, you'll see this little hook, it looks like. It's this strait that ships have to pass through, and it's tiny. I think I read it's like 20 miles wide at its most narrow point. Tiny, right? So these vessels, these big cargo vessels with natural gas, liquid natural gas, oil, have to pass through this tiny, tiny little strait. Well, Iran geographically controls the majority of the Strait of Hormuz. And they've got all kinds of stupid little drones and mines and little boats, little suicide boats with bombs on them. And they basically do guerrilla warfare when they're ticked off like they are now on the vessels trying to pass through. So they're saying, okay, you want to hurt us, we'll hurt you. No vessels coming through here. We'll make sure of it. Well, they did make sure of it, because even though we outweigh them heavily militarily, what they are able to do is cause enough disruption that the insurers will not insure these vessels going through. They absolutely will not. I read that the price right now to get a vessel in and out of the Strait of Hormuz is up 600% for the shipping companies. 600%. So in effect, in essence, the strait is closed down. Oil is not coming in and out of there. And President Trump has said, we'll give escorts to the vessels coming through. But in essence, the insurers have said, we're not doing it. And so it's in a de facto closure. The oil and the natural gas that passes through the Strait of Hormuz represent 20% of the global consumption. So 20% of the oil that comes through the Strait of Hormuz, 20% of the liquid natural gas that comes through the strait, it is being supplied to the globe. It is no longer available. So what happens? Of course, prices come up, they escalate. So all of this is a big, long way of saying the market is now in risk off. The market is, nope, we are moving to our safe havens, and you can see the money moving to the safe havens. So let me get back to our chart here real quick. We're just kind of floating sideways right now. There's no trade at the moment. You can see right here, just floating sideways, slightly downward, but no trade for me. I don't like this little range bound movement here, not going anywhere. So in essence, the whole market is saying, flight to safety. And where does money usually fly to? So remember this, money doesn't disappear out of the market. It doesn't just evaporate. It goes someplace else. Where does it go? Well, number one usually is the bond market, because that is considered the safe haven of all safe havens, the bond market. You are virtually guaranteed whatever the rate is now, 4%, I want to say ish, right, on the bonds. So that's one of the first places that money moves to in a safe haven environment. Another place is precious metals. What did we see going on over the last several weeks and months? What did we see happening? Silver and gold went insane. They went insane. Well, guys, that was the clue, right? I've been saying this for weeks that we are in a distribution, meaning big money is selling under the covers, under the hood. You can't see it, but if you knew what to look for, you could see it. And this is what I've been saying. We are selling underneath the hood. And one of our clues was, what did gold and silver do? They went insane, went nuts, right? So that's another safe haven. Precious metals, gold, silver, copper, palladium, all of those are considered safe haven. So we talked about bonds, we talked about precious metals, the dollar, right? If you can't do anything else, go to cash, right? How many people just go to cash? Well, big money doesn't usually just go to cash. They usually want to make some money on their cash, but retail a lot of times just goes to cash. So that's considered another safe haven. When you see the dollar index rising, which we have been seeing, you see precious metals rising, which we have been seeing, and the bond market starting to get some action. This is clear writing on the wall that we are moving into a risk-off flight to safety environment. So this is what we've been seeing. Now, how do we trade that? How do we trade this? How do we know what's coming next? It's very hard, and they don't make it easy, right? So let's take a look at the daily chart, and I'll show you what I'm looking at. Now, right now, there's no trade for me. So trust me, I'm keeping my eye on this. No trade for me. We are between this low of day and the VWAP, and we're just floating sideways. I'm not taking a trade in either direction until I see one of these two levels break, okay? So let's go to looking at the daily charts, and you can see kind of what I'm thinking when I look at what's going on in the big picture. The first thing I do is come out, look at the daily, look at the weekly, look at the monthly. And because I trade the SPY, which is the ETF over the S&P 500, it matters to me what the S&P 500 is going to do. So I track the S&P 500, I track the NASDAQ, which is closely related to the S&P 500, and I track the major tech stocks because those make up 30 to 40% of the weight of the S&P 500. It's made up in the major tech stocks, what we call the Magnificent Seven, right? Apple, Amazon, Microsoft, Meta, Google, NVIDIA, Tesla, sometimes Broadcom. We track those because those make up the heaviest weight of the S&P 500. They make up almost all the weight of the NASDAQ, okay? Okay. So let me move over to our daily chart. We'll do a little analysis here. And I'm going to move over to the S&P 500. All right, as you guys have seen before, my ridiculous chart is covered with red lines. What do I always tell you? They will come in handy. They're here for a reason. Well, certainly they are coming in handy. Take a look at where we bottomed over the last 2 days. Do you guys see this red line here? Let me zoom in more. I want to make sure you can see it. All right. Right here, look at this. This is support, 67.15. We came all the way down through it on Tuesday and bounced. We came all the way down through it today at the exact same level. Look at that, exactly the same. And we bounced so far. This is what we're seeing, this support zone. So what do we notice about, if we zoom out again, what do we notice about the pattern that we're currently looking at? Well, it wasn't this notable a few weeks ago, but I was calling it out. If you guys remember, when we were over here in February, I was calling out this drop that was coming, because you can start to see it. This is what's called, I mentioned this several weeks ago on the stream. This is what's called a Wyckoff distribution, and now it's being confirmed that we all this time have been in a Wyckoff distribution. Meaning, Wyckoff was a trader who back in the day noticed that certain patterns would appear. This kind of up and down sideways consolidation would appear when big money was either accumulating, buying, or distributing, selling. And he noted that you would see these bumps, right? And either we were accumulating, so we would come down here and then big money would buy if we were accumulating, which we weren't, or we would come up here and big money would sell. And it's hard to tell when you're looking at distribution or accumulation. It's hard to tell which is which until they've almost finished their job, right? But what big money is doing under the scenes, under the hood, is they are quietly pushing the market up and then selling a chunk of their positions. Now, why do they do this? Why do they do this over time? Because big money is moving in millions and sometimes billions of dollars. What would happen, do you think, if they threw $1 billion sell order on the S&P 500? Can you imagine what would happen if there was $1 billion sell order on the S&P 500? Crash, boom, we are going to crash. We're going to crash hard. And what does that do to big money? Well, it kills their sell price, right? It works against themselves, right? They drop this big sell order out there. They try to get out and boom, the price immediately crashes. So they're stuck in their own loop. They cannot do that. They have to get out in chunks. And that is what this Wyckoff distribution is all about. They're pushing price up and then boom, selling a chunk. Pushing price up, boom, selling a chunk, and so forth. We started to see the evidence here with this lower high starting to form. So here's our all-time high that was created on January the 28th, all-time high, and then we got a little lower high. We couldn't quite tell right here what was truly going on, although we did have the benefit of seeing these previous drops. But we couldn't quite tell what were we doing here. We looked like we were going to, during this time, everybody was screaming, oh, all-time high, S&P is going to 8,000, right? Everybody was still euphoric in at these levels, right? But what was big money quietly doing? They were quietly selling. And so we got this lower high, we've made another lower high, and we are slowly trending down. That is what is going on today. Now, we've got a nice bounce off this bottom here. So what is going on? What's going to happen in the future? Well, we need to take a look. All right, we're pushing the low of day here. So I'm watching this, guys. If we push up through this, we could go higher. But so far, the last two times we've attempted, we have been rejected. So let's see what happens here. That's this blue line right here. Let's see if we can beat it and continue to move up. Okay, so what is happening over here is we are losing our 100-day moving average. That's a big deal, guys. We've talked about it many times on this stream. This 100-day moving average is a line in the sand for a lot of big money, a lot of algos, right? The algos are out there. They're programmed. When certain things hit, they are programmed to sell or programmed to buy. The 100-day moving average is one of them, and so is the 200-day. This is the 200 down here. The 100-day is a level where big money will sell if there is good reason to believe that this 100 isn't going to hold. Well, it's starting to look like this 100 isn't going to hold. Even though we are getting a nice bounce today, I think it's hogwash. I don't think they mean it. But this 100 has been lost pretty convincingly, at least for today. So they tried right back here in February. We broke it and bounced. Here, late February, broke it and bounced. Here again in end of February, broke it and bounced. And then what happened? We broke it on Monday, closed below it on Tuesday, tried to recover on Wednesday, closed above it, gapped down on Thursday and closed below it, and then whoosh, big gap down today, far below it. So we are currently below the 100-day moving average by about 70 points. Now, could we recover that? Absolutely, we could. Could we turn and make another run for all-time highs? Yes, we could. That's not off the table. That's not out of the realm of possibility. But by and large, it is my opinion that we will continue to see a little bit of this herky-jerky zigzag movement to the downside. And I think we should at least test the 200-day moving average, which is currently sitting at 65.85 on the SPX. That is going to be another roughly 200 points below us. It doesn't have to happen today or tomorrow or next week or next month. It could take some time. We could do a whole bunch more sideways. We could do a whole bunch more zigzags. We could turn and make a run for the top. But by and large, in my opinion, this is our direction to the downside. So that was very long explanation of what I'm seeing in the big picture, but it's important to know the dynamics of the market are shifting. If you are a newer trader, let me zoom out here. I want to talk about this because this is important. If you are a newer trader, what has the market been training you to do for the last 2 to 3 years? Let's take a look. What has the market been saying you should do over the last 2 or 3 years? Let me give a little bit more time on here. Let's give this a couple more years. 3 years. We'll look at 3. Okay, here's 3 years. We made a pretty significant bottom back in April of 2025, and we bounced, right? But overall, if you zoom way out, look at what has the market been doing all of this time? Moving up, which is fine. That is what the market is designed to do. The S&P 500, the NASDAQ, the indices at large, they're designed to go up, right? The stock market will go up. That is what it is designed to do. But every now and then we get a wrinkle in time and we get a correction. So if you are a newer trader, 2 years or less, what has the market been saying that you should do? It's been saying you should buy the dip, right? Oh, little dip, buy it. Little dip, buy it. Little dip, buy it. Dip, buy it, buy it, buy it. Buy the dip, right? And in general, you should. The market is programmed to go up. So in general, in the big picture, if you're a buy and holder, you'll be okay. The market will go up. But, okay, we are breaking this low of day right now. Coming up over the low of day. Just watching it here. We are kind of right here testing the same top where we've been 2 times before. Okay, so newer traders have been trained to buy the dip. Well, market dynamics are shifting, guys. You are not going to be successful with that same model for a while, I'm afraid to say. Will there be opportunities to buy the dip along the way? Yes. But we are moving into a year, in my opinion, we've got lots of geopolitical risk, which the whole oil, natural gas thing, that is not going to get resolved for quite some time. I'm going to say 2 to 3 months at best, at the very, very best, until we start resolving the oil price, right? So that's not going away. We also have a midterm. This is a midterm election year. that historically tends to be a down year. We are also coming off the heels of two very strong back-to-back double-digit wins in the market. What are the odds that we will get another? They're not high. And we are coming into a very, very tricky economy, a very challenged economy. So, what is the landscape for this next year? I think we are moving into a bear market in 2026. Doesn't have to be today or next month or next summer, right, or this coming summer, but it is, in my opinion, it is coming. Now, how do we define a bear market? A bear market is defined as 20% drop below the all-time high. So we are sitting right here with an all-time high on the S&P 500 at 7,002. We are losing this low of day. I'm going to load some puts here. I'm not getting into them yet. I'm just watching to see if we get a drop here on this low of day test. This is our third try. So let's see what happens here. Okay, so the all-time high sitting at 7,000, a 20% drop from there, which would put us at roughly 5,600 on the S&P 500, is how we classify a bear market, right? Sorry, guys, just watching for trades. It is a quick little drop there. It's not giving us much of a shot at getting in, is it? Darn it. Come on, give us a little pullback. All right, I'm going to jump in real quick on this put. I am in. All right, I'm out at 5%. Punch it. That was a quick little win for us. Don't know if you guys took it. It should keep coming down and test the VWAP here, but I am cautious today. I'm cautious every day lately in this environment. Basically, what I was just about to explain to you, the fact that the market dynamics are shifting is what has me cautious, right? I think that we are moving into a risk off sentiment. We're moving into a potential bear market in 2026. The dynamics have changed in trading. Your typical trades that you were making good money with over here, they're not going to work in this market. You've got to be on your toes. You've got to be fast, in my opinion. This is how I trade. So that was a good little trade for us. Hopefully you took it. I hope you did. And so this is why hopefully this stream is of benefit to you. We will trade together. I will teach as we go. By the way, I'm really good in trading downtrending markets. I don't know why. I have no idea. I always trade better in a downtrending market than an uptrending. I have no idea why. I make money both ways, but I always do better in a down. So continue to follow me. I will lead you through this correction as it is happening. We'll trade every day together and we'll learn about the market together. I appreciate you guys so much. We're coming up to the end of our stream. We took a couple of trades today. We did well. And I am really feeling good about today. I've had a fantastic day. So I'm going to be super cautious and not lose any of my gains because the market loves to take it back. They sure do. All right, guys, we are going to be back again on Monday at 11 a.m. Eastern. Thank you so much for joining, and we will see you on the other side. Have a great weekend. Spend some time with your friends and your family, your loved ones. Enjoy your time. Trading is a blast, and I love it. But remember what's truly important, and that is to just let those people in our life that we love, let them know it. Spend time. Enjoy them. All right, guys, we'll be back on Monday. Y'all take care. Bye for now.